Hello, I'm Jared Nelson, and welcome to Pros and Cons, the show where we take you through the risks and opportunities behind the trending ideas in the market. Have no doubt, U.S. stocks are on a roll. The Dow and S&P broke new ground again last week after a string of record highs in recent weeks. Spearheading the rally are financials, a sector we talked about back in spring. Blue chip investment bank Goldman Sachs soared to new all-time highs, as did Morgan Stanley. Likely to follow these banks into record territories are J.P. Morgan and Bank of America. Another financial-related sector booming right now is residential property. Take a look at the Case-Shiller National Home Price Index. Prices are accelerating into record highs. And this is just a national snapshot. Some local areas are experiencing a boom so strong that several old-timers are calling it unprecedented. In other words, America is basking into a twin boom right now, surging stock and property markets, just like the good old Goldilocks days back in 2006. The investment case for buying property is well known. It is a real asset, so it hedges against monetary expansion. Moreover, property prices are less volatile than, say, stock prices, so you don't need to worry about day-to-day price fluctuations. And over the long term, house prices tend to go up, as the Case-Shiller Index shows. Lastly, property produces regular income in the form of rents. Before the housing boom, many properties produce rental yield in excess of the long-term Treasury yield. Unsurprisingly, due to these compelling factors, property has attracted huge investments over the years, especially during the last 12 months. Prices have shot up due to falling mortgage rates, lower housing inventory, and higher demand. However, a housing boom can't last forever. History tells us that most housing booms end in tiers. The most recent one, if you can remember, was the subprime housing bust in 2007. Over-leveraged developers go bankrupt, overextended banks implode, and overstretched buyers suffer negative equity. Some housing booms literally took decades to unwind. Think of Japan. Even though the U.S. property market is now booming, is it a good investment at current prices? Risk number one is obviously interest rates. The Fed is suppressing interest rates due to the pandemic. As soon as the pandemic is ending, a rebound in mortgage rates may happen, especially as the Fed is aware of the overheating housing market. Property price is very sensitive to interest rates because of the huge leverage involved. Risk number two is that prices are too high already. Buyers can easily overpay for houses, and a small correction will tip home buyers into negative equity. When the purchase price is too high relative to the rental income, this can also create a problem due to the negative cash flow. Risk number three is a potential reversal in the working behavior. Right now, the work-from-home pattern is creating demand for larger houses outside cities. When the pandemic ends, and it will, demand for this segment of the market may deflate steeply. Safe as houses is what people have said about real estate for centuries. That's true for the most part. But after a major price boom, buying a house can be quite unsafe to your wallet. If you intend to hold the property for the long term, that may work out fine. Short-term speculators or flippers, beware. Another point worth mentioning is that property is as much a local game as a macro play. Some areas are definitely a better buy due to the location and emerging industries in that region. For investors still wishing to gain exposure into the booming property market, perhaps buying into property stocks may be a better idea. Not only can you change your exposure quickly, you can also adjust your position size more flexibly and diversify into commercial and logistic properties. Vanguard Property can be a good choice, as it is the largest property ETF in the market, with $80 billion assets under management. Its price action looks reasonably good. But one problem with property stocks is that the equity market is a steep upswing too. Look at these property service stocks, Jones Lang LaSalle and Colliers International. Both are sitting at new highs. As for the logistic REIT Prologis, prices are rising as fast as Bitcoin. Chasing these strong momentum property stocks may be suitable only for swing players with tight stops. In summary, it is clear as day that the U.S. property market is booming, but after a year of frenzied buying, most bargains and desired locations have already been snapped up. Buying cheap is no longer an option. Now, either investors buy in or stay out. The choice is yours. That's all we have time for this week. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar.